Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 16th of April, 2022, and it's the weekly technical analysis for the euro, the cable, and the Aussie dollar for the third week of April. Let's begin with the euro. And on Thursday, you can see that it spiked lower to test the previous swing low here. Let's go back to the weekly time frame, and you can see that was the swing low that it from a year ago, from April of last year, or in fact April 2020, so 2 years ago, where it has tested that level on Thursday after the ECB decisions and meeting as well. If we go to the 4-hour time frame, as you can see that there was a spike on the second 4-hour time frame here after the 9 o'clock close, 4-hour close. So the ECB statement was at 7:45, and then the 7:45 US time in the morning, and that's where it already started to drop lower. So the ECB did continue with their dovish tone. That's why the euro has dipped lower and tested this before it's bounced back up to still close above the 108.00 level. So now it's consolidating between the 109 and the 108. It did test below that, but basically it's still constrained in this level. But with bearish close, there could be further test of this swing low area. Back to the daily time frame. So there's a long wick candle here with a bearish body, and Friday, even though it's mainly holiday across the world here, for Good Friday, it did sneak lower just to test the 108 level. So yeah, it's already drifted lower after breaking below this channel. Let's remove this here now. So this area will be a resistance zone. And let's change this fib to reversal here. And let's see whether it aligns with, we need to change this to a bearish continuation move. And there is a confluence of the 138 bearish continuation with the 162 bearish reversal fib here. So this will still remain as this support with the swing low, and let's move this to this area. That's the next key support zone, and that's going to be at the It's going to take a while to get to the 105, 70 to 80 zone. 70 to, yeah, 70 to 80, 105, 70 to 80. So perhaps let's remove some of these and change this to the lower levels. Let's move this to 106. That's just above the support zone here. Let's also move this one here to a 107. Okay. Let's take a look on the weekly time frame. And it has closed right at that swing low of the previous bearish move down. So that could be for the continuation move. There's still weakness in the euro here, and especially with inflation and as well as the conflict in Ukraine. So it's steadily drifting lower, heading towards the 107 first and then the 106 round figures. Okay, so this week there's only minor news with the Eurozone flash manufacturing and services PMIs. This is across all the major economies. Friday. And let's also check out the US dollar index. And it was because of this dip in the euro that actually helped the US dollar to spike higher as well. So let's check that as well. So this is the DXY, the US dollar index, and you can see this was on Thursday. There was no trading on the Friday, so there's no candle there, and that was the long wide range upper and lower wick of the US dollar index as compared to the euro as well. And it went to test the lows and the resistance level. It did hit that 162 extension. And in fact, it spiked through that past, went up to a high of 100.67. And this confluence of these two flips here was at the 105.50 odd level. Now there could be further consolidation for this coming week. It has stayed above the 138 fib extension at the above the 100.12. So let's take a look on a weekly time frame, and that was a bullish close, but with some upper wick on upper shadow with possible continuation, but then a consolidation after that. So this area at the 78.6 or 62 fib retracement, I think we can remove that for now. At the just below 99. So this swing high here will still be a support now at the 99.44. Let's extend this. Price could return to test this level if it dips lower. So that's where the confluence of the 786 and the 162 fib extension here as well. Let's move this up slightly to this support level here. Just above the 98, where the daily 55 is climbing up to. Okay, so looks like there could be a pause in this bullish rally. It has not signaled reversal yet, so it could just be a consolidation and then could be further follow through later on. So we'll see how it goes for next week. And if the euro is going to continue bearish for the rest of the month, then this US dollar will benefit from that. Let's move this over to clear area. So this is 98. Let's move this over. The 100 level. Okay, and let's move this resistance up to the 200 fib extension. That's going to be at 101.21. That may be the next target zone. Okay. All right, let's move back to review the other pairs. Let's move on to the cable, where you can see a strong bullish move on Wednesday. And that was after the UK CPI figures, which was better than expected. On Tuesday, during the US session, we had already anticipated a move to back up to target the 131.00, this level here. But it took another day after the US CPI figure came out, neutral. The pound dipped lower first before finding support and then bouncing up on Wednesday after the UK CPI figure. Let's expand this. You can see that it found support there, and let's go to the 4-hour time frame. That was this one bullish move from the 9 o'clock close, 9 a.m. US Eastern. That was the 4-hour close. It was a strong bullish move and carry on higher above the 131. And take note of this on the 1-hour time frame. 1 hour. This was the that was a Tuesday. Attempted to move up higher, but then retreated lower. And this was a 1 hour inverted head and shoulders here. And after breaking out from the 55 period EMA, it blasted through to hit the 131. And in fact, if you add a bullish reversal move here from this swing high and to the swing low, it shot past 162 and went up to, it did target the 200 pip extension, which is a double of this move here. So it did hit the 200 pip, and then on Thursday it was brought down following the ECB dovish tone, and it was a retracement for the cable as well. Pound sterling fell back down to the 78.6 pip retracement. Dip below the swing high here. Okay, so I'll be sharing this in my weekly trading blog, so watch out for that tomorrow, Sunday. Okay, let's go back to the daily time frame. And after hitting this fib extension area, it's also the fib retracement of this swing move down, and that's at the 21 fib retracement, hit that, and it was also a weekly, was also at the weekly S1 level or R1 level, resistance level 1, and pull back lower. Okay, so it's basically constrained, so this is a valid resistance zone, and then drop back to close to the weekly pivot. Okay, let's check out the weekly time frame. And yeah, it's a bit constrained, although it drifted slightly lower, but still within the previous week's range. So this coming week, there's only minor news coming out on Friday, which is the retail sales along with the flash manufacturing and services PMIs. Let's remove this clip here. And we will keep this as the support zone. This will still maintain as a intermediate resistance zone, and above that, with the daily 55 coming down, it's Next key resistance will be at 132.00. So now it's constrained between these two levels here now. With the round figure of 130. And the 21 pip retracement. So it's still attempting to climb up higher, but for now it's constrained in this. Looks like it's a slightly falling channel. It's drifting, trying to drift lower, but it's finding support. So it's consolidating now. We'll see whether it's able to maintain this level and slowly turn back up, or whether it's also going to follow the euro, drifting lower, but at a slower rate. Okay. Let's move on to the Aussie dollar, where the Aussie dollar has also been trading in a narrow range and drifting lower, especially on the Friday, where markets should be basically quiet, but it still drifted lower and closed lower for the week below the 74.00, the support zone here. On the weekly time frame, that's because there's this continuation, bearish continuation move lower after this long spike and upper wick of the previous week, and drifting lower and heading lower towards these next fib levels, but eventually looks like it could be targeting the weekly 200 EMA at 73.20 area, and that's where there's the swing high level that it needs to return to test. So let's move this support zone down to this level here. That's at 73.14. It is moving towards the daily 55, where the 62 fib retracement is at. I think can remove this for now. This zone is still very valid up here, so let's lower this now. 75 is going to be the next key resistance zone. Okay, let's also take a quick look on the 4 time frame, and you can see that it has been finding support from the 4-hour 200 EMA, but being restricted and constrained by the 55 period EMA above that, and eventually breaking below the 200 and the 00. So it's starting to retrace further. All right, so this week there's only the monetary policy minutes and let's see, I think I made a mistake here. This should be on the Tuesday, not on Friday. It should be on Tuesday. So that's the only key news for the Australian economy. And although it does have some flash PMIs on Friday as well, but it's usually quite minor. Okay, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.